horizontal lines that you drew?
So these are resistance levels. Basically, that was the price was testing this level to see if it could break through this.
Okay, so what are resistance levels?
This is supply levels.
Okay, supply levels. So it was supply levels when?
Back here on this week, 420 and also 4/6/2013. So back in April.
Let's in order for you not to confuse stuff, shade the two price points between 130.65 and 131.10 or something like that.
Right here.
All right, and then put an annotation next to it.
Okay.
Yeah, put the annotation next to the shader there so you would know that that is the supply level around that area. All right, what happened now then last week? What had happened last week? What happened to the closing price? If we stated the closing price is important,
Right.
So what happened now with the closing price?
It closed above the supply level.
Okay, so is it currently still in the supply level?
No, not anymore. It broke out of this range.
So that's what I was trying to figure out from you when you say it's at the supply level, but it did break the supply level, right?
Oh,
Okay.
right.
If it chooses to drop, what happens now to the supply level?
It's now invalid because it's been broken. So it can.
Which is now going to be what?
It could be a new demand level.
It could be, or it is now the new demand level.
It is now the new demand level.
Sweet. Put an annotation next to it as well. Yeah. Okay, put it on where the shaded area is. Okay, nice. So if the price decides to drop, will it be at demand or supply?
It'll be at demand if it drops now.
Okay. So in the past, when it was a supply, what did it mean? What is a supply? What is supply?
It was basically the ceiling for price to test. If it chose to break out of that supply level, then we could see new highs.
Alrighty.
If it
Okay,
chose to.
John, what is supply? So in the past, it was supply. What is supply? Hello, John. Hello. Hello. Okay, John's one's not working. Hi, Anthony. How have you been? I thought you guys you'll be coming. I thought you'll be attending the Art and Science of Technical Analysis Friday, Saturday, Monday.
No, I couldn't make it.
Got it. All right. So supply. In the past, the price was in a supply. What is supply?
Supply is a good area to sell. There's a it's where the price is higher relative to I guess overall where the trend has been.
Okay, alright, not bad. Lolita, what is supply? So in the past it was in a supply. What is supply?
Supply is where the sellers are resisting the prices.
Perfect.
The institutional seller.
Excellent. So that is the answer I'm looking for. Excellent. So supply is the area of resistance where institutional sellers are resisting the price. Good job. Very nice. Okay, that makes sense now, Jason. So in the past, it was an area of supply or a supply where the definition of that is when institutional sellers are resisting prices. So what happened last week?
Last week there was just more buyers that broke through the resistance level. So there, you had basically had more buyers than you did on sellers at that supply level, and was able to push that price through that level.
Got it. And now, if the price chooses to drop in the future, will that shaded area going to be a demand or supply?
Now the old supply will become the new demand level.
What is now demand?
Demand is when you have more buyers than you have sellers. Or the
That's when
price
the
is being
price will
supported
go up.
by institutions will
Good.
support that level.
Supported by institutional who?
Institutional financial firms or banks,
What type
anybody
of
with a lot of
institution?
inventory to move at one time.
Institutional buyers or sellers?
Buyers.
Institutional buyers. Okay, cool. All right. Do we know the next high of the move?
If we go back in time and look, we can find a new high.
All right, let's go check it out.
So here, let's see.
All right, so that's the last pretty much high, right? 131, 36, sorry, 134.36. That is now the price to beat based on the weekly. Is the week finished?
No, it just started.
Okay, it just started. Alrighty, so let's go through now based on the daily chart. So we know that last week the bulls are just way too powerful. Okie dokie. How can now we then draw our first level of supply? On the weekly, there's nothing showing that, on the weekly it's the 134 area.
So case of, get rid of this, that's broken, valid. So there's our supply level here, there's our demand level, and our trend.
Okay, it's actually much more beneficial using the same chart. So from the weekly, you head down to the daily. Okay, go to the daily chart. You will see there very clearly your level of demand, right? Okay, since 134.56 or 36 is the major supply level, now you need to analyze on what's happening based on yesterday's bar. Well, basically yesterday, but we're looking at today too, right? What happened yesterday?
Doji,
Okay, what does doji mean?
indecision or consolidation.
Decision consolidation. Let's start from the bottom. Lolita, what does doji mean?
It means that it's indecision or consolidation. I would agree with what Jason said.
All right, uncertainty. Okay, Anthony, what's doji mean?
I agree with the definition, and maybe add this possible change of direction in the price.
Okay, possible change of direction in the price. For those who were with me for 3 days, let's talk about your laws. What's dojis? Yes, it's
Law
uncertainty,
one.
and which is now a what?
Law one.
Yeah, law one,
Stability.
stabilization. It's trying to stabilize itself. So now if there's a stability, there's a stabilization, where will you now put your resistance line or your level of supply? Okay, if the current price or the current bar, if the high of the current bar will not go beyond the high of yesterday, what's going to happen now?
It'll establish itself as a new level of supply and resist this price level here and move to the downside to retrace.
To downside, to retrace. Okay, great. In other words, what are you now looking for?
Bearish movement to the downside.
What are you looking for based on the laws?
Oh, law 3.
Okay, law 3. Okay, if it chooses to drop to correct itself, where is it going to drop down to, do you think?
To make it objective, have to draw retracement based on that low to that high.
So is it magical that the 38 and the 50% is also your area of demand, a strong area of demand that used to be an area of supply?
I don't know about magical, but it's validated.
Yeah, when I say magical, like how come it's coincidental in terms of what you drew and based on the fibs? So in other words, it's validated as per your definition, right? Okay, 131.10, 130.70, 06. Now you have, is the daily chart finished?
No, not even close.
No, not even close. So if it chooses to drop, do you at least have the probability of at least making 80 pips to the downside all the way to 130 pips?
Let's see. To 38%, yes. 50, about right here. 50 is right there. Potentially.
So
Less likely with the 50% or below the 50% than with the 38.2%.
which has the higher probability of winning though, 38 or 50?
With the 38 for sure.
Okay, so now what is the plan of your, or the intent of this trade?
Being that it's in an uptrend, I would only, for my own plan, I'm going to stay conservative and stick to the 38%, 38.2%.
Okie dokie. Alright, so did that answer now your question then in terms of identifying the demand and the supply?
Yep, absolutely.
Alright, let's do more. Lolita, will be your turn. Choose a pair, please, and we're gonna do one. So the goal for today is to identify support and resistance objectively, and as a continuation of what we did from the course itself.
Okay, one moment.
Okie dokie. And then after Lolita, John, you'll be next. Oh, your mic is not working. Yeah, buy a new laptop. Buy a new computer, John. Then we'll go through for Anthony then, that's next. And then I know Angie, you're in the room. You'll just observe for now.
Can you see my screen?
Yes, man. Okay. So step number one, we're gonna first look. I'm gonna coach you, guide you on a step-by-step basis. Okay. So step number one is to look at the current bar. Based on the current bar, who's currently in control at the moment, the bulls or the bears?
The bulls.
Bulls. If there is a probability that the bull is going to continue to go to the upside, then we need to identify where the price is going to go first. Okay. All right. So we need to now find the last high. Where do you think is the last high of the move?
Okay, so from the current bar, right?
Mm-hmm.
Let's see. So then I have to look at the high. So is the high of this bar higher than this bar? That's no. Then if the high, okay, wait a minute. I get confused with this. Okay. It's the previous bar, right? Is that correct, Ray? Am I
On
not
the
wrong?
actual move itself, because with the current bar, the bulls are in control. So if there's a
Right?
more probability that the price will continue, say tomorrow,
Right?
where is the price or the price going to go to? Then obviously it's going to go to the upside. So we need to
So then,
find the first level of supply.
oh, so I'm looking for the supply. I'm not doing a fib
Correct.
line.
Correct.
Okay. So then, um, so it's not, it's this bar. This is the first.
Okay. Is that a higher compared to the previous high? The high
This
of the
high,
red bar?
this high is high. Oh, okay, I got it. This high is the high of this bar. Oh, God, it's confusing. Okay. The high of this bar is higher than this bar. Am I doing
So
it backwards?
yeah, so is the current bar higher compared to the previous bar?
Yes.
Okay, yes. However, we need to find the price. So once that high is higher compared to the previous bar in the bottom end, then there is a probability of a new change of trend, meaning if, that the continuation of the price to the upside is highly probable. However, if you're going to put a resistance line right now on the current bar, the high of the current bar, the
Mm-hmm.
probability, it's too close, right?
Right.
But what we need to ascertain is to find where is the price going to reach to the next level of resistance, to the next ceiling, next supply level. Okay, now you go to the previous bar. Is the high of the previous bar higher compared to the previous bar?
This one.
Yes. So is the high of the doji higher compared to that red
No.
bar? Easy, no. Is the high of that red bar higher compared to the previous bar?
No.
And then ask yourself the question.
Is the high of this bar higher than the previous bar? No. Or
Okay,
no.
okay.
Is the high of this bar higher than the previous bar? Yes.
Okay, then you need to put then now your resistance line on the high of that one.
Okay.
So in other words, okay.
Oh, got it.
So is that price valid enough as a supply level?
Yes,
Why?
because it touched more than 3 in the past.
Awesome. Okay, now you have to keep on going. Where is the next high?
Okay. So the next high would be this bearish bar here
Why?
because it's higher than this past bar here.
Where is the highest high? Is the
The
red bar?
highest high would be this bar.
Correct. So which is more valid, the high of the red bar or the high of the doji?
Ah, okay. The high of the doji.
Yeah, you always have to go backwards. Okay, look left. Left. All the time is the left. You're analyzing to the right, you're looking back to the left.
Okay.
Okie dokie. Where is now your area of supply?
This range here.
Excellent. So like similar to what Jason did, put a shaded area on that, please. Okay, so there's a probability that price can go back there to 131.92. However, if the price doesn't want to go further up, then we need to find our good demand level, right?
Yes.
To do that, you need to find the lowest low. Where is the first lowest low? How do we know and define the definition of lowest low?
Lowest low. The definition of the lowest low?
Mm-hmm.
It's the lowest low within a trend, the lowest.
Okay, so it's once again you look left. From the current bar, look to the left.
Yeah, from the current bar. Is this low lower than this low? No.
Okay, keep going.
Or if this low, which is 29.42, lower than this low? Yes. Than the previous bar. This low is lower than this low.
No, remember, look to the left. Left to right, not right to left.
Okay. Is this low lower than the previous bar? No.
Okay.
Is this low lower than the previous bar? Oh, no. Is this low lower than the previous bar? Yes.
Okay, cool. Then you need to put now your first support line. Okay, we're going to keep going in the past to find the next low. Where is the next lower low? So keep going in terms looking to the left, bar by bar to the left.
So go, even though this is obvious?
Well, there's one, if you're, and this is the interesting part of the human brain, we'll actually miss certain places. So you go bar by bar.
Okay, so is this low lower compared to this low? Yes.
Okay.
Is this low lower compared to this low? Yes.
Mm-hmm.
Is this low lower compared to this low? No.
Okay.
Okay, so
Keep going.
is this low lower compared to this low? Yes.
Is the doji, yeah, is that lower compared to the previous low?
29 and 30. Yes.
No, it's not.
This,
Is that
okay,
low lower compared to the previous low?
to this low, right?
Uh-huh.
Yeah.
Do it again.
This low is
Is 3060
3069
lower
and this
compared to
low is
3054?
3054. Oh, is this low lower? Oh, no. Jeez.
All right. Is 3054 lower compared to the previous low, which is now 3034?
No.
Okay. Is 3034 lower compared to the previous low of 3038?
No.
Is 3034 lower compared to 3038?
3038, yes.
Bingo. So now put a line on that 3034, please, on the blue bar. Perfect. So that line or that supply level will be Euro's first challenge. It is an if and then statement.
So why is it there though, Ray? I'm confused. Why is this the one that we chose?
Okay, who's supporting that low at that time?
The institutions.
Why
The
institutions?
institutional buyers. Because they're saying that they don't want the price to go below this point.
Okay, excellent. What happened 4 days ago?
4.
Oh, I'm sorry. Yeah, from the current bar, 1, 2, 3, 4.
The bears took control.
Okay, then what happened 3 days ago?
The bears were still in control.
So who pushed the price all the way down?
The
Who?
sellers.
The sellers. What type of sellers?
Institutional sellers.
Then what does it mean then when they broke 130.34?
Oh, that the trend.
So why did 130.34 got rejected?
130 got rejected. Because there were more sellers than buyers, or
Okay, so what else? Let's have, I want to hear actually some other answers as well within the group. Why did 130.34 break? So is in the past, if institutional buyers are supporting the price at 130.34, then how come 3 days ago sellers pushed the price down? Why did it break?
because they're saying it was too expensive.
Too expensive? Who else?
News.
So if the news even came in, so what is it saying? Okay, analogize it compared to a business that you're currently in. So why did 130.34 break? Because if institutional buyers are supporting 130.34, then that means that the price should be coming back up to 131.92. How come it didn't do that though? Jason, Anne, Angie, John?
They think the price is cheaper.
Price is cheaper. What else?
There's not enough buyers.
Just different changes with the dollar index.
Change the dollar index. There's not enough buyers. Come on, let's go. Let's think. Why? Why did it get rejected? Why did 130.34 break through to the downside?
Because they had to create a new higher low.
That it's a retracement or a pullback.
No, because the original question is why 130.34 as a resistance line, as a level of supply? Why not 130.40? Why not 130.50? And then objectively we went through bar by bar that the lowest low, the last lowest low is at 130.34. The current lowest low is 129.42. The last lower low is 130.34. So if we've established that 130.34 is being supported by institutional buyers, then hence is why the price went back up to 131.92. But it got rejected as well to the upside. It didn't want to go above 132.43. Hence it came back down to 130.34 4 days ago, and then 3 days ago he got pushed by the sellers. So he got pushed by the sellers all the way to the downside. Now my question is, why did 130.34 break? So all the answers basically you guys stated. There's not enough demand, there's more sellers than buyers itself. It's trying to create a lower low. So what I'm trying to find from you guys is through a story of the third dimension, what happened do you think at the floor? What do you think happened at the markets between a buyer and a seller? And then you basically stated also part of the news.
The buyers lost the fight.
The buyers lost the fight. So who are those buyers once again?
Institutional buyers.
Institutional buyers. It cannot be you and I. In order for that price to break so massively solidly to the downside, institutional sellers have to push all the way down. So in other words, that is, if there's 10 institutions, banks that are currently trading this place, rather than having 10 buyers and just one seller, then probably there are going to be 10 sellers and 2 buyers, institutional buyers only. So if there's only going to be 2 institutional buyers supporting 130.34, but there's 8 institutional sellers, what do you think will happen to the price? It's going to collapse. It's too weak, right? It is too weak in order for 130.34 to be supported. Okay, now we've established that institutional sellers push the price all the way down because there's not enough buyers in there, and then it dropped to 129.42, where the current price is currently at 130.05 or 130.48, 130.46. What has to happen in order for 130.34 to be broken?
A lot of buyers have to come in.
A lot of buyers has to
Of
come in.
course.
Excellent. Okay, a lot of buyers has to come in. We have a lower low. We have a higher high. You're currently in a level of demand. 3 days ago, sellers are currently in control. Now, what are the probabilities? At the moment, yesterday, what did it do?
Yesterday it consolidated a stability.
Created stability, created law 1. What is the next move of the market? So if you're playing chess, it is the chess's move right now. The market's move. What is the market trying to achieve?
Law 3.
Which is
Retracement.
retracement. Okay, so it's going to retrace itself. Then what can we do to see objectively of the price where it's going to retrace to?
I need to draw a fib line.
Awesome. Alrighty, let's put a fib line there, please. Okay.
Oh, that's the wrong way.
Since it's retracing to the upside, first you need to find the last low.
Right.
Okay, great. And then the last high of the trend. Where is the last high of the trend? Is that the last high of the trend?
Oh, of the current trend.
Mm-hmm.
So it'll be there.
Is that the high?
Oh, wait a minute.
Awesome. So, is it a coincidence that 130.34 is a good supply number?
No.
Look at that. Just 1 pip from the actual retracement level itself. Okay. I mean, actual fact, high to the low because we're trick finding, right?
Oh.
Okay. So 130.35.5. Can it reach 130.35.5 from the current price of 1.30038?
Yes.
There's a high probability. Is it also a good supply level though?
Yes.
It's got a good supply level since now creating a new lower low, right? Where it created a new lower low 2 days ago. So if it's trying to correct itself at low 3, maximum, where do you think the price is going to go to?
For a retracement?
Yes, for a retracement, correct. To what price do you think the price is going to go if it chooses to retrace?
Maybe the 50%.
Excellent, maybe the 50%, but it's going to struggle. It has to break 130.35 first.
Right.
Why is that? Because the last lower low was at 130.35, which was an institutional buyer, but it got broken by sellers, so that is it. If it breaks through 130.35, easy, it can go to 130.66, 130.96.6. All right. If you're going to do this trade at the moment, you're going to go long, you're going to go short. what will you do, Lolita?
I don't know. I don't know if I would enter this trade just yet.
Okay. Alrighty. Jason, what will you do? And while you're gonna, I know you're gonna type John, what will you do? So Jason, what will you do?
I'd probably wait for the end of the retracement and then go short. I think I would go long there.
Alright, you wait for retracement and go short. Anthony.
I would go long to the 38% level.
Okay, you go along to 38% level. And
I would go long to the 50% level.
long to the 50% level. Angie, what do you think you would do?
I would go along to the 30% and another target to the 50%.
Okay, how can we find out whether it's a really good idea to go long or go short?
Check the weekly.
Nice. Okay, weekly. Let's have a look on the weekly, please. Okay, weekly. What did it do last week?
Last week the Bears were in control.
Last week the Bears were in control. If the Bears are currently in control and the level of demand, what is actually the overall trend at the moment?
A downtrend
Downtrend from when?
from about a little over, oh, that's 2 years ago.
Oh, 2 years ago has been a downtrend. Okay, good.
Yeah.
Alrighty. John, what do you see at the moment? Downtrend, uptrend, sideways. Jason, what do you see? What is the current trend?
The short-term trend is up, long-term is down. So it's overall consolidating, but currently in a level of demand with the bulls in control.
Current level of demand with the bulls in control at the moment. Okay, from is it okay, Anthony.
Looking at this thing, it looks like last week it broke a level of a demand level from 2 weeks ago. So it looks like it's in a downtrend at the moment. So shorting would be, the probability for shorting would be better.
Okay, that's according to Anthony's. And what would you do?
Okay, what I can see is that it's creating higher lows in the immediate trend. There's actually a breakout of the downtrend. If we draw our trend lines, we need to draw our trend lines and see. But at the moment, it's not the level of demand.
Demands a level of demand. Okay. All right, let's draw our trends. All right, Lolita. No, there's no right or wrong. Where do you think you will put your trend line first? Okay, cool.
Will that go all the way up here?
Okay, let's see. Actually, I want everybody to do this exercise. Actually, so we got the euro against the dollar on the weekly. I want to see how you guys draw your trend lines. Okay, I will put this into. Change the presentation first to me so you can see my screen first. Right, I'll give you 3 minutes to, so it's the euro against the dollar based on the weekly. I want you to draw your trend lines. I'm going to have a look.
Renato, how far back should we go? Like 3 years or?
Technically speaking, if I don't see the last high, I need to find where is the real last high of the actual trend.
Okay.
Yeah. Alright, I'll mute myself. So 10:45, currently at the moment 10:48. And then we're going to go starting from Lolita all the way up. Alright, I'm muting myself. Over now. Okie dokie, let's go have a look, starting from Lolita.
Can you see my screen?
Yep. Okay. Right, nice. Perfecto. Thank you. Right. John, let's see your screen. Okay, not bad. Okay, so Jason, your turn. Okay, perfect. Alrighty. Anthony. Nice. And okay, nice. Let's see, Angie. Okay, not bad. Okie dokie. Alright, the best. Okay. And we're busy. Anthony and Anthony, Jason, Lisa. Okay, that's pretty much 100% objective right there. So for John and Angie, I'm gonna pass pretty much a presentation to Lolita, and I just want to see, you just want to see it and compare it to yours. Okay, you notice right there you have primary downtrend, secondary downtrend. You have your primary uptrend, secondary downtrend, or secondary uptrend. Right, cool. So notice how the secondary downtrend and the secondary uptrend are also currently meeting, and approximately about 50 or 60% in the next few days they have to make a decision whether if the price is going to go up or not. 30.96, they have 40, I'm sorry, 92 pips, 92 pips to the upside. Right, so there's convergence between the two, pretty much, you know, on the really bigger scale, that's pretty much on a downtrend. Okay, from you can see here, high, low, high, currently forming a wave to create probably new lower low if it chooses to by June, July, probably even August below 120 if it chooses to. But if it doesn't want to, from an uptrend perspective, from the 7th of the 7th July of last year all the way to where we are at the moment is an uptrend. From 2011, April of 2011 to where we are, it's a downtrend. Even all the way to 2010, technically speaking, it's a downtrend. Okay, because of the lower low. All right. So the question would be, is what will be the intent of this trade if you choose to go and buy and go long? Alrighty. Because on the weekly, the sellers are currently in control. Sellers are currently in control, but the price and the level of demand. Can the price come down and touch the primary uptrend? So if you now go in the past, notice if you look in the lowest low of look at November 24, 1124, 1125, I reckon, probably December. So if you put your arrow where it says 1124 on the bottom, see the doji right there? There, oh, yeah, more to your left, sorry, to your right, 1124.
Oh, 1124?
Correct.
Right here.
11, and then the next one. What's the next one?
This one?
Bingo.
Or previous to that?
1201. So 1201, 2012. Is that low lower compared to the previous low?
Oh. Oh, wait a minute. Let me get out of that. Is this low?
You'll have to put your arrow below that line. Yeah, there you go.
2876 and 2881.
So is that low lower compared to the previous low?
Yes.
Excellent. Okay, put a support line as well on that low of that bar, please. Bingo. So is one, and then we're going to maximize that with using the same on the same tab. Change it to a daily chart, please. Cool. The best answer is I will agree with Jason. Wait for the correction and actually short this because it's in a downtrend.
Right.
The probability, I believe there's more room because if the price is really that strong to an uptrend, what is the clue? What clue will it give us if it's pretty much stronger to the upside?
Momentum.
Nope.
If it hits the 30%,
Nope. What clue did it give us that it has more room to go to the downside?
To the downside?
Uh-huh.
The last low is lower than the previous low.
Okay, when you say the last low, which low? Which last low?
The current low, so the
Bingo. So the current low broke which one? The last low of the uptrend.
yes.
Okay. That is a key indicator on why the probability of the price can go to 128.81 is highly probable. Righty. So if the price goes to 130.34, even on that 50%, probably that 130.50, I will short that. I'm not going to go along that one. The probability of you losing if it chooses to go up is higher because of the broken of the trend line, or mainly of the last low. All right, questions based on that. So what we've done is we identified supply, we identified demand, we identified actually looking at the current bar, creating the probability of where the price can go, either to the upside or to the downside. We've looked at trends, looking at the primary, secondary downtrend. Okay. Any questions? We thought that we did make more clear in terms of how to find objective area of supply and how to find objective area of demand.
Yes. I need to
Awesome.
continue to work on it though.
Absolutely. Jason?
Yes, yeah, absolutely.
Okay, John? Cool, not a problem. Anthony, just by watching?
Yeah, I picked up the supply and demand, but no questions.
Okay, cool. Also Anne and Angie. Basically, I went over the weekend with these guys to do more objectively on how to find area of supply and demand, mainly the area itself, by using actually the lows and the highs itself, rather than just the opening and the closing.
Perfect. Yeah, no questions. Pretty good.
Awesome. All right then, guys, we'll leave it as it is. If you'll be in the next class, I'll see you, but if not, then I'll see you next time. Have a good one.